Hi all, welcome back to Invest Pure Wealth. Today, let's talk about unfiltered finance chart. So this is a new episode to understand what is happening in the market and what is the real story of people like you who is investing or invested for the past and now coming to know the new stories. So let's hear this story out. It is a real story in Bombay. So I met with a client last week. Uh, so basically, that meeting was to understand what exactly he has done for the last 20 years, and now he is approaching for retirements in next 4-5 years. So he was looking for a serious wealth manager or private banker who is going to help him building the retirement corpus and the way forward to manage their wealth. Now here is the story. When we sit and saw his existing portfolio, I got really upset by seeing a lot of insurance policies, out of which 60% of the money is gone into LIC premiums and rest 20% gone into ULI products and hardly 5-10% into actual mutual fund investments, which is for the last 8 years only. But the portfolio started 20 years back. Now he is going to get maturity amount after 1, 2, 3 years consecutively. So when we study, it's a huge amount invested into insurance, which is not giving 6.5% annualized returns. So then client was under impression that he'll be getting in crores, but it is not. The entire years of savings or investments, as per his understanding, it is in investments, and it is growing in the market. And he was not bothered about reviewing it, looking at the value. Never. He is just paying the premium for over a period of 15-20 years. Now the total value is coming around 75 lakhs. Now the same money, look at the situation. Same money 20 years back, if he would have invested in a mutual fund, and 20 years CAGR return in a good performing mutual fund is 20% and average performing mutual fund is 15%. So that must be in crores. So that is the opportunity cost. So I said, this is the amount you have invested over a period of time, and if you invested the same amount in a mutual fund, this is the kind of returns you must have got. But then look at the situation about the agent or maybe the advisor, so-called advisor. They are also not bothered about selling wrong products or selling repeated products to the same family and taking 80-90% of their earnings into insurance. And now, fortunately, the same person is again became the advisor in, distributor in mutual fund, and now selling mutual funds. So then, client is now, matured enough to understand where he has done, what kind of returns he have got. Now, he completely agreed that boss, I have to get out of all the ULIPs immediately, and I have to, stop investing anything now in the name of children or in the name of grandchildren, whatever it is, wherever it is. That again, there are 2-3 person from coming from bank, person coming from advisory firms, person coming from LIC agents. So I think instead of giving endowment plan, at least agar it is an ULIP maximum amount of investment, at least he should have got he must have got 10% plus kind of returns. So this is simply a story for others, those who are looking for investments, for getting more returns, better returns. So please do not consider insurance investments, insurance savings. You can say insurance savings is not an investment plan. So if you think that you'll be getting so much of insurance cover along with the investment returns, it cannot be possible. If you are investing in a ULIP, the returns is again 10-12%. But if you are investing the same money in mutual funds, you are getting far better returns than ULIPs. Second, insurance and ULIP, mutual funds should be separate. If you are looking for insurance term cover, only life insurance cover, then you keep it separate, by investing some money and taking a term plan, whatever crores of rupees you are looking for, 1 crore, 2 crore, 5 crore kind of. And then the investment amount should be separately invested, which is purely into investing in equity through mutual funds or through portfolio management services. That will create a lot of value. So now he is having only 5 years to accumulate, but that's okay. Whatever happened. So we said, okay, let's start the new one. I mean, new chapter of your life. So then we started in mutual fund and some in equity, some in PMS. All the advices, I mean, all the discussions happened. Now client is happy to start with. So my request to all the new investors, they should understand what are the products you are investing in, what are the expense ratio, what are the total expense in that particular product. So if you go and check the ULIP, the total expense is more than 5-6%. So even if the fund manager is doing well, but still the client is getting 5-6% lesser return in hand. And then there is a hard lock-in period, which is not good for you, because anytime you can need your money, you may need your money and that money is not available for you. That doesn't make any sense. So hence you should invest in such a way that anytime you can take out money, anytime that money is available for your family requirements, emergency requirements. So it should not be locked in for 20 years, 15 years kind of. So that is the first story we are sharing. I hope this is going to help you in creating your own assets, and looking forward to connect with you. Thank you for watching this story, and see you in the next episode with some other stories which will definitely help you. Thank you. Have a great day.